Good morning, UPBOptionMillionaires.com. It's a Friday, August 22nd, 2014. Guess what? We have one full week left until Labor Day weekend. Pretty wild. So enjoy the summer while you can here. And we have stock futures pulling back a little bit. And you can look at this decline. This is the European market open. We had a pullback. What we've been seeing really overnight is, and you can look previous night, spike higher after the European open. So we got a little bit of a pullback, but we pulled back down to support here. We're bouncing. And I think what's going on here is the market hit new record levels yesterday. It's been a tremendous rally, and we're just digesting some of those gains. So we might see a little bit of a pullback here. It's Friday. Remember, last Friday we had a little bit of a pullback on the news over, and this was the pullback here. This is Friday, about an hour and a half into the open. We had that news out in Russia and the Ukraine. We pulled back, and then by the end of the session, we recovered all those losses. Pretty miraculous. And this week we've been rallying pretty much every single day. So that gets boring after a while. So throw a little wrench in the works. Maybe a little pullback is in order here for the market. We're down about, 0.15%, almost 0.2%. When you look, the trend remains to the upside. I brought this chart up numerous times. The Abenomics low trend line has acted as perfect support. Again, perfection. And we had this significant, look at this rally. Yeah, so we're a little bit overbought here. And each time we get a little overbought, we pull back slightly and then just get even more overbought and more. So we'll be over 200. We're so close, 50 cents away here on the S&P 500 ETF spiders. We had earnings out last night. Let's just go through some of the earnings, and I'll show you some of these spikes that we had. How about GameStop? I've been talking about this in my videos as well, and you can see after the bell spiked up, actually the $45 level, consolidating here. The one thing to watch for is heavy short interest in the stock. So I think even though we're at these levels, the shorts are going to cover today. And that's going to take us up to $44 and $45 level. We had TFM, the fresh market, spiking to almost $33. Actually, I think it was a print over $33. You can see it now, consolidating, digesting the move up. I like that word, digesting. It was a tasty move to the upside for TFM. And so I think a sympathy trade, and I'm in the calls, would be WFM, which has been mired in a slump. And I pull up a chart here of Whole Foods, and you can see it's right at support. Right at support, much like TFM had bounced off support at about the $28 level, something like that. So I'm looking for a move higher. I have the $38 calls that expire today, and I'm looking to move out to next week and the week after. Let's look at a couple other stocks that reported earnings. How about CRM? CRM, I'm in the 5650 calls, and it's doing pretty well. You can see the move up. It's had a nice week, rally pretty much all weeks. Actually, the rally started last week. And the earnings report has vaulted it higher. Okay, the levels we haven't seen in quite a while for CRM. So I look for a continuation. A lot of analysts are out bullish on the stock. Let's look at GMCR, which is one of the reasons why you can't be selling your options when they drop to 5 cents. I mean, once you're in an option contract, you kind of have to stick it out a little bit. I could see having a limit set in for I only want to lose 20% of my option or 30%. But this is what happens. Look at this spike up for GMCR. I think there was a deal with Kraft or something like that. If you got into any of the call contracts yesterday, you're doing pretty good. So that's one of the reasons why when you have a call contract or a put contract that drops to a nickel and you're just trying to scrape, $30 left from that trade, you're better off just letting it expire, because when you got something like this go on, you imagine having 125 calls at 5 cents that you sold. They're worth $2 now. Okay, there you go. So instead of having $100 less commission, so about $90, you're looking at $4,000 possible here. So that's GMCR, and let's look at the volatility. And the VXX was actually up a little bit yesterday, and you can see it's kind of possibly bottoming here. The VIX, it still hasn't reached the levels that we saw back when everybody was screaming about how the volatility was so low. You can see the move up it's had over the last couple weeks. It's pulled back really to recent lows, but the lowest level here was at 1032 in the VIX. So still a lot of room to go, and you can see this. Each of the spikes up has resulted in significantly lower VIX. So I would expect the VIX, this could be the time when it goes over 200 on the S&P 500 that we drop, or the SPY, that we drop below 10. It's coming. Let's look at just a couple more stocks, and then I'm going to get into trading. U.S. Steel has been pulling back a little bit. It still looks on target for that $40 break. How about Caterpillar, which is coming all the way back up? Back. Caterpillar dropped below. And if you look at this top trend line here, this is a part of a channel that goes back many years. And it's really, again, digestion, consolidation. And we hit a triple top here, pull back, and look at this recovery here. Look at this recovery. We've had a nice, strong 3 weeks for Caterpillar. Trying to get back up here, and maybe the fourth time is the charm. If Caterpillar does indeed break this 110 price line here and surpasses recent highs, it's going to break out to 115, 120. 115, 120, 125, 130, 35. Speaking of 130, Boeing is on pace. Boeing bounced perfectly off support. I brought this up at the blog at optionmillionaires.com if you want to check it out. When it hit its low at about 119.80, I believe it was low, and it's bounced perfectly. We're the third week into it, and we're just that close to that 130 target. And we could draw a trend line across, and it actually might bring us up to about 132.50, 133. Gold and silver have been very interesting trades here. I think gold is going to continue to go to the downside. This is a 5-year chart, so we're looking at approaching lows we haven't seen, possibly, if we do get that swoon down about 110 level that we haven't seen since the start of 2010, which is going to affect some of the gold miners, which have been just meandered in this kind of channel, right? So you would think, yeah, this looks possibly like a W bottom, and we've seen a W bottom, similar to W bottom for Apple. But the W bottom was in the midst of a long-term trend to the upside. It was just consolidation as well. We could see that move down for GDX, so keep an eye on it. All right, so it's UPB here from OptionMillionaires.com. Also in the NASDAQ, the QQQs, and we had that broadening descending wedge. I talked about the tech wreck of 2014 in April, the tech wreck, and we have made significant gains since then. So yeah, a pullback, while not welcome for us call buyers, us salivating bulls, us dummies. I am a bull, but I'm also a bear. Yes, I trade both ways, but you can call me a dumb bull now, an over exuberant, irrational bull. So yeah, I'm in calls, but yeah, it'd be nice to see a little bit of a pullback here to kind of reset things for the next step to record prices. All right, UPB here, OptionMillionaires.com. Again, the summer is almost over. Enjoy it. Go out skinny dipping in the pool with the neighbors, and I'll see you in the chat room at OptionMillionaires.com. If not, have a great weekend. Goodbye.